Okay, I'll call the public hearing of June 5th, 2019.
Sorry.
Call the City
The white
Council work session of June 5th, 2019 to order at 6 o'clock. Roll call, please.
Mayor Copeland,
Here.
Tom Baylor,
Here.
Ken Jones is absent, Jeff Guard,
Here.
Melina Meyer is absent, Ann Schaefer is absent, David Allison,
Here.
David Gleason.
Here.
That's a quorum of council.
Okay, thank you. Tonight's work session topics are city investments, strategy, risk tolerance, number one, and then reorganization if time allows. So we'll start with work session topic one, city investment strategy and risk tolerance. And I'll turn it over to Manager Lanning.
This is probably one of my least favorite topics because I don't know anything about this. I wouldn't say I don't know anything. I don't know a lot. The first thing I'm going to do is, and Tom, I apologize to you. I should have sent you one by email today, but I have a printout that we got a month ago from UBS, and it was really a follow-up to what we had. Well, this is not for tonight, really.
Oh.
This is really not for tonight, except for on the back of that packet, you will see some fee structure from UBS over the last few years, and that was the intent of the packet, but I thought I'd just give you the whole thing just as a reference point. I've been talking to a lot of people that are either involved in investing or have experienced investing, and I've learned a few things along the way that I hope will be helpful to you. So I'm going to, as I like to do, I'm going to go to the board, and Tom, you got an emailed picture of this board?
Yes, I did.
Okay. So I'm just going to give you an encapsulation of, this is my interpretation of conversations with various folks. And some of this is interpretation. So forgive me if you know something different or feel something different. I'll be happy to defer to you, but I'm going to try to classify this in a way that I think I'm hopeful will be helpful to us in charting a path forward. Things along the way. We talk about risk, and your risk is either low, moderate, or high, and I only use three categories. Of course, there's values to that. And if you look at our investments, in any given year, we have drawdowns, and you have quarters where you don't have very good performance, and we worry about what happens at the end of the year. What does the end of the year look like? Your return, and that percentage always translates into a dollar amount. So basically, the very low risk stuff is fixed income, which are basically bonds that are guaranteed by the United States government. There are government bonds that can be sold for a maturity of one date worth up to 30 years. And of course, it's all about maturity. If you buy a bond that yields 2.6% and it's a 20-year bond, you get that 2.6% at the end of 20 years. So it's a fixed income. Municipal bonds are included that. All over the country, every day, there are municipal governments that are selling bonds. And then there's federally insured CDs. The federally insured CDs have a $250,000 limit to keep the insured part of it. So on 8 million, we could buy 32 of those. And on 9 million, we could buy 36 of those, just as a reference point. There are also corporate bonds, and corporate bonds are the flimsiest of the group. They have more risk associated with them, even though they're bonds. And then you can set up a bond fund, which has more risk, but I'm going to stay away from that because I'm trying to get on the low end here. The key issues on the low risk side is you eliminate the principal risk. If you have $1 million in bonds and you let those mature, you're not subject to a downturn because you get the value of the bond you purchased. If you start with $1 million, you go to maturity, you're going to get $1,026,000. So there's no principal risk involved in these investments. Of course, you're going to have a lower return. Right now, if you look at the bond market, in the packet that UBS gave us, which was a follow-up to their visit, if you look in their packet, they're saying that the long-term outlook on the bond market's about 3.3%. I have a variety of different types of bonds that are running somewhere between 2.2% and 2.85%. But your yield is going to be much lower. Now, we just were informed that our year was about 3.8%, so it's 1% below that. It's all about maturity. For example, if you bought government bonds or muni bonds, and you bought issues of increments of $1 million, you could stack those or tier those so that bonds matured every year for $1 million, and then you would have income from that bond. It would be almost a guaranteed income because you could really track that easily. The other thing, there's very low fees or no fees. Probably no fees is not a good answer, but very low fees on this. And also, buying bonds can be self-administered. For example, you would have a broker who you work with, and when your $1 million bond matures, they will notify you that the bond is maturing. And then you say, and then they say, here are options available to you. Do you want all the money, or do you want to buy another bond for $1 million? And so then you direct them, let's buy this bond with this maturity date on it. So every time you have a maturity date come due, they notify you. You could, our finance group, our finance department, or myself could operate this. Our fees would be about 20 grand a year, maybe. It'd be 20 grand a year, but they'd be extraordinarily low in the low risk. But you get low return, low fees, and low risk. They all go hand in hand. So if you want to turn it up a little bit, then you can go to your moderate risk, which is index funds. And what you do is you buy a set of funds that exactly imitate the Standard & Poor's or NASDAQ performance. For example, if Standard & Poor's or NASDAQ goes up 4%, you go up 4%. There's not a lot of hands-on management that has to happen of that because you're just buying index funds that mirror. Even though it's a managed fund, it's not heavily managed, so your fees are going to be lower here as well. But if the market goes down 4%, you go down 4%. So you're going to mirror exactly what the stock market does at any given time. There are better earnings potential. Of course, the risk increases, and you have principal risk. If at any time you divest yourself of that index fund, because what you do is you actually buy the index fund. It's yours, you own it. But when you sell it, it depends on where the market is. You're either gonna make good money or not. So it has lower fees, but there's principal risk involved in it. So that's your sort of your moderate risk. Then you go to the high risk. High risk is stocks, mutual funds, and securities. And typically, these are an individually managed account with second-party involvement. In other words, you have an investment firm. That's what we have right now. Although their investments are very conservative, we have the second-party involvement in very active management of that firm. On a day-to-day basis, they manage our account, trying to keep us in the low-risk category, high-return category. It has the highest earning potential. If you look at some of the people who have submitted information to me, they'll tell you that in this, they do a couple things that I find interesting. One is they take your portfolio and they go back and they take your money and they build a portfolio. And in that portfolio, they could give you a history of what happened in the last 10 years. That number is always pretty high. So you would have done really good if you were with us. But it seems like the practical application of that is fairly low. This is the highest risk, it's the highest fees, and the highest principal risk. So if you're doing an actively managed fund in some of your accounts, you have to determine for yourself how much of your money you want to put at risk. You'll see in the UBS chart that they provided for us that there is a, he has a graph in there that shows your actively invested money up to $4 million. If you have $4 million invested in this area and actively managed, you have to be prepared to lose half of that in principal risk as the market, if the market takes a nosedive. So the question here, oh, and then I met with a local group in town and who's has decided to change their methodology, and they went with a banking institution. And I think a good portion of the reason why they went with the banking institution, as I heard it, was one was the fee schedule, and the other one was the fact that they had banking needs because they had money in different places and they wanted to consolidate everything into a banking scenario as well. So an investment portion of a national bank is going to be taking their portfolio. So it was one of the things that I heard that I found very interesting is your investment strategy should be simple, understandable, and enduring. In other words, that investment strategy should outlast our tenures here as an asset for the city. Should be enduring. That means it stands the test of time, that it produces good results year after year after year, but it's simple. So simplicity was talked about a lot. And of course, over in this scenario, I fail to understand the logic, the methodology, and all of those things that go into managing something like that. And you can read in UBS's stuff what some of their philosophy is. So that's my quick take on risk and return and what's available to you. The thing you need to decide is if you want to have an actively managed fund, and there are plenty of firms that can be a broker or they can actively manage. And our current provider, they're not really a broker, but they're an investment firm, and they actively manage, they're wealth managers. So, you know, that's what they do. And I also have copies of the investment policy that the council has gone through, and basically in Alaska, you don't have any restrictions on what you can invest in. Question is, what are you willing to risk in terms of getting a higher return? And you got to be prepared for that risk. You've got to actively say, we're okay with losing $2 million. So,
So council, is there any questions, council?
Yeah, I got one.
Councilman Gleason?
What was the difference between the fees, or do you have that from Bank of America versus UBS?
what I noticed was the fees are come to you in terms of basis points. And so the 50 was about the normal basis points in the responses to the RFP that was sent out by this local group. And it looks like the fees from our provider are around 60 basis points.
So I don't know what that means really, but what's the dollar difference?
60 grand versus 50 grand.
Okay. Okay.
And you can see, and I'm not providing this information as a really a judgment on our current firm, but I just wanted to have this for you for comparison, because this is a question that was asked several times. If you go to the back 2 pages of the handout that I gave you, it says COC gain loss with fees and short-term instrument comparison. If you look in the right-hand column under the 2017 estimate where it starts 12 million, goes down to 73 million, you can see the 0.60, which is the fee. That's 60 basis points.
So that's the fee, 73,000?
Yes.
Okay.
And then, as I understood it, that may not be all the fees you're paying in an actively managed account, because some of the stocks, the mutual funds, and the securities that you buy, the brokerage firms or the people that trade those or handle those also charge a fee for handling them. So there might be additional fees involved that we're paying, but they're not calculated as part of this. If you go to the very last page, you will see in about the 5th, 6th column where it says fees, you can see what happened in 17, 18, and 19. 57, 55, and 13 so far in 2019, which was probably through the first quarter.
If I could just interject something, council, like in 2015, we took a net loss of almost $600,000, and you can see there was deposits and withdrawals of almost $3 million. When you're losing value, they're probably doing a lot of portfolio restructuring through the course of the year, so they're probably selling a lot of items that are dropping maybe, or selling and grabbing profit before they drop, and they're paying fees on those transactions for whoever's brokering them for them. And so there we paid 0.74% or 74 basis points. So that's what's, your costs are higher, even though our balance is, so partly because our balance is higher then, but also because they're probably doing a lot of trading as it's a volatile year, whereas you look at a year like 2012, for example, $950,000, that was probably just one single transaction. It's an even number, so they probably just cashed out for a capital project or something and otherwise didn't touch the portfolio, and they only charged 40 basis points that year. So they may have not done any active trading in that active part of the portfolio. They may have just cashed out a bond or moved some cash. So Are there any questions or comments online, Councilman Baylor or others?
Yeah, just,
You're coming across real soft, Tom.
how about now? Can you hear me?
Oh, that's better, yeah. Still very quiet, but it's better.
Well, I don't have the advantage of having the paper in front of me, unfortunately, but basically my notes, without that paper before this meeting, I have listed here, what are the 10 years of fees? What is it year by year? And how are they calculated? Is it a flat rate or are they doing it by trade? And then what is our mix of investment? And maybe you have that in front of you. And one of my other concerns is, I just have to call him Junior, I don't know his name, but when did the son take over? That's something that, I think it was my portfolio, I would have wanted to been notified that somebody new was stepping in and what his experiences was and maybe have some input on that. You're talking about they do rebalance it, where you get some charges. I'm sure they do it every year, but my thought was, it sounds like you've got all the information. I got questions about in front of you, but my thought was get those answered and then perhaps go out for RFP and see what some of these other companies have to offer. I'm not a fan of 100% bonds. I think somewhere there should be maybe a 60-40 split there with bonds and stock or other mixes. But yeah, the market goes up and down. But if you look at that, I think if you audit that 10-year span, what did we have 10 years ago? What do we have now with the highs and lows of the market? And how much did we draw out? I think you'll see we came ahead. So some years you do drop, but others you pick it back up. But I'd like to hear some other firms and see what they have to say. It sounds like these guys are a little bit high in their fees compared to others. That's all.
Thoughts, council? It just, this is another place where it'd sure be nice to have more transparency on what our raw fish tax revenues are going to be from year to year, because as we have a little more volatility in our revenues and aren't really sure what we're going to have coming in, it makes it a little harder to be risky with your portfolio, where you maybe can't afford to take as big of a hit if you may be forced to dip into your permanent fund or something. So, or if you have a large capital project like the harbor or something coming up. But if on a year-to-year basis what your raw fish tax revenue is going to be within, plus or minus several $100,000, that kind of helps with your revenue picture.
And I think, we talked about, well, our procedure was to, when we did the budget in 17, we did 800,000. Last year we did $1.5 million in the fish tax, which brings up our revenue and puts us closer to the average of that, which certainly gives us, if that's the case, is going to give us some security in that number. But we've got to manage that revenue as well as part of our overall budget to make sure we don't get too far off track on that. And so we've developed those accounts coming forward in the next year to really be able to track those averages for us. Not that we're going to put that, where hopefully you're always going to be able to put some money away, but given our current revenue situation, we're not putting any money away. We're just not in that position.
So I think the consideration or thought for council is whether or not to go out for an RFP and take a look at other management opportunities or approaches. Is there any further discussion or questions, or move on to the next item? Councilman Allison.
Well, I think, like Councilmember Baylor said, I think we need to look at the current ratio, current investment policy, what direction we've given to UBS on what we're doing, and see if our risk tolerance has changed any. I can tell you, for one, I'm not willing to risk $4 million, or even half of that, quite frankly. You know, I can stand a $10,000 or $20,000 loss, you know, and with a 40,000 gain the next time, but I don't think we can withstand losing in the millions. So anyway, I think we need to look at that ratio and decide as a group if that works or not, because you know, if we go out for an RFP, we're going to need to be telling them what our tolerance is and what our investment strategy is as far as what we're willing to risk, for sure, because that's going to, you know, can make a lot of difference in the outcome of anybody's proposal. So I think we should start there, and then I'm always, you know, willing to look at proposals from whoever wants to go out for RFPs. That's fine with me.
Councilman Garden.
I think looking at all of our options, you know, from what our risk level we're willing to tolerate is, different firms, management structures, all that, but we're hitting a time of the year to where we're not gonna have very many council members sitting at the table to give too much focus at stuff. And this is kind of a big deal. It's our piggy bank. So I'd be interested in it. I just wouldn't be interested in it in the middle of the season.
One thing that jumps out at me on this sheet, and I think like Councilman Baylor said, it would be good to, this kind of gives the breakdown of the earnings and their fees. And then I think their former presentation showed kind of what their weightings were. But one thing that jumps out is their cumulative fees over 10 years is almost 25% of the earnings that you've had over those 10 years. So that's a pretty good slice. So there's a cost to that active management. Okay, well, it sounds like kind of the consensus is
One more
to,
question?
Councilman Baylor, yeah.
Yeah, and then it'd be nice to know, I mean, I think we've got the averages year in, year out, like 3% 1 year or so, but what is our total percentage up from year 1 to year 10? Where are we at? You know, have we lost 10% or have we gained 40%? What is our overall gain in that time frame? Because we are looking at, with this fund, a long period, long time out there. So that would also be interesting to see how this performed.
Okay, so it sounds like if we kind of roll these together, council would like to see what's your portfolio weightings kind of from their former presentation. This information now kind of boil it down to a couple of metrics, like what were the overall percentage of earnings over the 10-year span and their fees over that 10-year span. And then maybe pick this up kind of postseason, maybe somewhere in the August, October timeframe, maybe just before budget, but when we have more of a full council to put eyes on. Does that sound like, I'm seeing some nods, does that sound like a?
Yeah, I think we've got Alan mentioned it earlier, but what was it, a resolution or something that set that policy, that investment mix at one point in time? There's an official, something that came from council at one point in time. I think that ought to be included. Whatever UPS is doing, but what our policy says.
You have an investment policy. It's August 16th, 2010. Does that sound right?
Yeah, and then I think it says we're supposed to pass a resolution annually, setting the, like, that's the full policy, but then annually we were supposed to set, I don't know, percentages or split, or, you know, what is our,
Anyway, if that can be included in that whole analysis, say, I'm with Councilmember Guard that this is probably not a good time. We need more memberships involved to get there.
Yeah, it was an election in March 2010 that added language ordinance or resolution. That I think there has to be an ordinance or resolution on the
supposed to, right.
investment policy. But there's the resolution from 2009, 08/10/50. What year is that?
10. Say it again?
08/10/50.
10. So 10 is, the middle number is the year.
Okay, so from 2010, so there's a resolution, and then there's an investment policy from August of 2010, which makes sense on the year. And then, so you can look at that. There's a resolution. In fact, we could just do this whole packet for them and put it in your box. And you'll have everything that goes with it. Dean put this together, I think, so.
Okay. All right, any other, yeah, Councilman Baylor.
Yeah, and I agree with everyone else. Now's not the time. We definitely have to have all 7 on board. But what I like about this is we get it out into the public, we start the conversation, and I don't know if we have this, somewhere in our pending calendar or what, but it's good that it's out there and people start talking about and asking questions, and you tend to gather more information that way. So, thank you.
Okay.
There are some, it's been interesting because I've had the opportunity to talk to several people, and there's really a different flavor that you get from everybody you talk to. And it was really interesting. I sat down with a group that specializes in actively managing funds. And of course, they say, oh, we think we can beat that performance. So that's really a hit or miss kind of deal as far as I'm concerned. But it's really interesting to hear the different positions that people have on investing. It was a good education. And in fact, I have another person who's coming to town this Friday, which is really interesting. And I ran into some people that, because Dean had worked with them there before, and I thought it was pretty interesting.
One more comment, Mayor?
Councilman Baylor.
Just thought occurred to me is we can go back and negotiate this rate that they're charging us. I mean, nothing's locked in stone. So give that some thought too, like bring these basis points down a little bit. They might consider that.
Mm-hmm.
Well, that's all contract negotiation stuff. I guess what we need to look at first is our policy and what we want to do as a policy. And then we can figure out how we're going to apply that policy to whoever we're going to have manage us. We can look at getting some proposals from some other firms. We can do whatever, but we got to figure out what our policy is, how much we're willing to risk here.
Well, what I meant was you can go to them tomorrow and say, look, we want you to drop your basis points down 10 points. I mean, they're going to say yes or they're going to say no. I mean, that's just asking for a discount.
Mm-hmm.
Okay, I misunderstood.
Okay, if there's no further discussion on investment strategy, we can move on to staff reorganization or organizational structure. Manager Lanning.
I think the first thing that I'd like to talk about is we have 2 open positions. We have finance director. I've talked to you about deputy city manager in that that organization scenario. And then we have Kathy's position, information services. We had changed her title to library museum director, and we had changed Jason's title to information services. Let me give you a little understanding of where we are right now. We are, since Dean left, we are Barb is in charge of finance right now. And June has returned from her family out east. Our intention is to have Barb continue to pay the bills, do payroll, account for the revenues, expand June's responsibilities a little bit, and Kara's doing all of the utility billing. So we think we can get by with that. Dean has taken home a city computer, and he is going to maintain access to Cassell so that he can do general ledger accounting, answer questions, and get into the system for us from time to time as needed. He is going to return in October, and he is going to do monthly reconciliations through October, and then he's going to come back at the end of December, early January, as we have it scheduled now, under the assumption that we haven't filled a position yet. And he's going to do the same thing and help with the audit function to get it started. So we think that we have the rest of the year covered. It's sort of as best we can do with what we have, which isn't necessarily a bad thing at this point. We just don't have Dean's expertise, which we can access, but there will be fees, and he's gonna pay. We're gonna pay him a fee independent of the firm he was working for. They're out of the picture now, and we're just dealing directly with Dean on. So that's what we're doing.
I can ask one real quick question.
Sure.
We have the blessing from the firm he was working for, so
Absolutely. I've already talked to them at length, and they're perfectly fine with it. And then in information services, after Kathy's retirement, Jason is taking over a number of duties, and he's going to be doing the e-news, and he's going to be doing the ads for the newspapers. And then we have reclassified positions in the library and in the museum, and filled those with staff people that were existing. That was Kathy's recommendation and her desire before we left. We still have some paperwork to complete, so we have those areas covered as well, including the Cordova Center, and that's a we're just starting that today, so we anticipate it'll work out fine. So, but in any event, in the scenarios that I've talked about, I think it's important for us to do two recruitments. One is going to be what I would term an administrative services director, which is going to lump in library, museum, all of those things. I still think there needs to be somebody that's going to really move all that forward. And then the financial part of it, either a finance director or a internal administrative services person, deputy city manager. And I've been of the opinion and am of the opinion that we need to engage in a professional recruitment for those two positions. I think we'll get some economy of scale in those recruitments. But the first thing I need to do before I spend a lot of time is put together an RFP to go out to get some responses from recruiters about their costs and what services they would offer to it. So that's the first step. And I think we're talking about a number of things right now, but I think this decision on your part to authorize me to go forward with that recruitment is an extreme priority right now and a decision that we need to make. So I would ask for input from anybody that has any thoughts about that.
On council's behalf, I just wanted to, so is the thinking on Dean in the October timeframe, are those reconciliations kind of in conjunction with their preparation for the budget, or?
Well, yeah, and we're going to be preparing budget. He'll help with that. I've I did that all myself last year, but there are still some pieces that the finance department needs to throw in the budget, but he will help with that, so.
Okay, and then did I hear somebody else dial in? We have Councilman Baylor. Is there anybody else on the line?
Yeah, it's Melina.
Okay, thank you, Melina. And then Councilman Jones just joined us as well, so you are 6. Manager Lanning just walked through some scenarios on organizational structure. Any questions or input or feedback, Council? Councilman Gleason.
Yeah, I was just curious for the librarian part, we can't get somebody local?
Well, we do have somebody local as a supervisor in the library and the museum and our IT services. But if we're going to combine several things, I think we need to do a recruitment, whether somebody local applies or not, to do a larger piece of the puzzle. Remember, we're trying to reduce the number of exempt personnel we have. And Councilman Baylor asked for numbers. I didn't bring those with me at this particular time because I'm rethinking some of this, but my thought is this: even if there isn't a net reduction in the number of exempt positions, the overriding goal is to have a net reduction in the costs of those positions.
I guess we would have to see those numbers before we could make any kind of decision, though.
Yeah, understand. The longer we wait for a recruitment, the more difficult it's going to get. It's going to take till the end of the year. At this point right now, it'll take to the end of the year before you find somebody, if everything went perfectly, to get somebody on board. Because even in your first go, you may not find the right candidate.
I guess we better get those numbers then. I mean, we got to have them, right? Or at least I would like to see them
Yep.
before I made any decisions.
Councilman Allison, then Guard, and then Baylor.
Yeah, I think either way you look at it, though, we have to recruit for whether you call him a finance director or a assistant manager or deputy manager, or whatever you call that position. That position we're going to need, so we need to get going on that one, especially if you're going to go out for RFPs for a recruiting firm first. You know, we've done the advertising thing for that for
Twice.
been advertised for several months anyway. So I think we need to do that one for sure. The other one, I think maybe seeing some numbers before I commit to that one. I'd like to see some of those numbers first, but for sure we need to do the one, no matter what we decide to do, we need a finance person in there, and we need to get going on that. So if we're going to do RFPs and stuff, I think for my position anyway, I'd say we get started on that.
Councilman Guard.
Yeah, aside from numbers, there are some things that were very appealing to me about the deputy manager, having a deputy manager's position. If we have somebody that is an avenue for continuity and leadership, instead of changing out management every 3 years or whatever the cycle is we got, with the deputy manager's position, if that works out well, then you're moving somebody up that's seen where you're trying to go. So instead of councils getting elected, portions of every year, city manager turning over every 3 years and trying to keep a steady course for doing something instead of bouncing off the edges, I think it would behoove us management-wise immensely over the long term. So I'm with Councilmember Allison. I'd like to see us recruit for that position as soon as possible.
Okay, Councilman Baylor.
Yeah, well, I'm kind of anxiously awaiting the cost analysis of all this too. I mean, I don't know what our current cost is for our current personnel, and when we start shifting things around, I'd like to see that analysis. I think that's probably job one, but I would also bring out is, you know, what are council's priorities? You know, is keeping the civic center active and keep conventions coming? Are we going to be able to do that? Is keeping the road cleared, sanded in the wintertime, potholes fixed in the summer? That's kind of a priority, I would think. We got to make sure that we have personnel available and we don't cut these crews down too much, that they can maintain that quality, because that's kind of what we're responsible for, and that's what we're going to hear from if we're not delivering services. The finance director, I'm not in favor of hiring a recruiter for that, and part of the reason is, you know, rolled in with that is, you know, help me out here, what is Miss Appleton's job?
Human resources.
What's
Human resources, yeah.
yeah, and tech. Ed, I think you're talking two different people there, two different animals, and you're not going to get a lot of people enthused about doing both of those jobs as well as finance. So I'm a little bit hesitant to move forward on something like that. But the cost analysis is a big thing, and again, we can get our costs down by pulling people out of certain departments, but are we going to be able to deliver the services that we need to deliver? We have to keep that in mind also. Thank you.
Councilman or Manager Lanning.
Well, the model change, the reorganization change, doesn't affect anybody below the exempt. So the 41 or 42 staff that we have on the ground actually, you know, doing the road work and all of those things, none of that changes. This is all above the exempt line is where we're trying to affect the change, because we're not trying to keep our service level high and still reduce to some degree our personnel costs. And since we don't have, if we were moving down the road with additional revenues at this point, remember when we started the strategic planning, we went from a $6 million budget and $2 million in operating funds to the same amount of money for actually a reduction in costs of personnel, and our operating funds went down to $500,000. Our goal over the next 3 years was to not increase or even reduce personnel costs, but increase our operating costs to get back to our benchmark of 2016. And at this point, with, you know, requests that you feel that you get to have to make decisions on coming up, our operational cost number is going down even more because our revenue is probably going to go down. So those are the things that we're trying to think about and still trying to manage the personnel. But the idea is not to reduce the number below the line.
Can I respond, please?
Yeah, Councilman Baylor.
Yeah, well, I understand where you're going, Alan, but I would maintain, and I use the streets as an example, if you take that person out of that position, he is out on the ground sometimes. You take him out of it, that means somebody that would have been running the truck or would have been fixing the hole is going to have to take his job over. Somebody's got to fill that position. There's got to be a foreman. There's got to be a lead man. There's got to be some cohesiveness in there. So you can take one position out, but somebody else is going to have to fill that void, and then that puts the strain on the rest of the operation. So that's what I'm saying you have to be careful about.
Other comments or feedback, council? So I'm hearing some council suggesting that we do move forward with recruiting, at least with the finance position at this time, and I'm hearing some opposition to that. So, and hearing the manager saying you need some, if we're going to do this, we need to get started. So,
Is this something we can take up during the regular council meeting tonight for an action item?
I don't think we have an
Well-
action item on the agenda. We can certainly put one on the next regular agenda.
What I'm going to do is, I'm going to start preparing the RFP regardless. So we'll have some in the next council meeting, but I'm going to start working on the RFP.
And then I think it would be
Your
helpful.
decision.
I think the other thing that would be helpful, Alan, is what I'm hearing from council is some numbers on the library position, what that would look like. So,
Yep.
Councilman Guard.
I maybe didn't ask my question well, but is this something for an expenditure that we have to have advertised on an agenda, or is this something that's an administrative deal to send the manager out to do it? I don't know how much
Well,
time and notice we need to give the manager the direction he needs. That was what my question was.
I think you can direct the manager to prepare an RFP, and then if that will kind of give you the fiscal note that you would have to vote on later. So
Okay.
yeah,
it
because
sounds like he's going to bring that.
realistically, we're going to have a contract. We're going to be moving some funding around. I don't think at this point that it's going to cost. Well, I think at this point between reductions in staff, I don't think this will be a net increase in cost for the budget. I think we'll have money to cover this in savings in personnel costs. So I'll get you some numbers.
So let's go ahead and put a action item on the next June agenda for proceeding with an RFP. And then if there's some numbers in there, we could kind of leave it open-ended, whether it's just a finance director and a library position. So does that sound good? Councilman Allison?
Yeah, that's fine with me, but I don't think technically we need to authorize the manager to do an RFP for personnel. I think that's his ballyhoo, and he can do what he wants to. I think what he's asking for there is, he doesn't want to do all that work and then us come back and say, yeah, we don't need a finance director anymore, or whatever.
That's
Whatever it
exactly.
is. I don't think he needs our permission to go out for an RFP.
Well,
That's right. It's not until it's a fiscal note that the council's
Yeah.
actually voting on hiring somebody.
there's a contract involved with dollars on it.
Yeah.
So, and there's a limit, an expenditure limit for the manager that's $20,000 or 25. So,
Well, it sounds like there's support for an RFP, so.
And we don't want to work that way. We want to,
you don't want to flap in the breeze by yourself.
no.
Okay.
Okay, council, any other comments on work session items on the investment strategy or reorganization? Okay, we have one more item on the agenda, adjournment.
Move to adjourn?
I have a motion and a second. All those in favor?
Aye.
Opposed? Okay, we'll adjourn until our regular meeting in 7 minutes.